Good morning, Mark Soderberg with ADM Investor Services with your morning ag market update. Quiet trade overnight, starting to pick up a little bit here this morning as we approach the pause and also ahead of the much anticipated USDA production and WASDE data. Corn right now is steady to about a penny better, 1 to 2 better in the beans. Wheat, the shining star, up 4 to 8 cents, unchanged in the meal, while bean oil prices are about 20 better. U.S. stock indices are lower to sharply lower. NASDAQ is off another 1.5% after being down 2.25% yesterday. Markets continue to reset valuations for several AI and just tech stocks in general after a historical 7-month tear we've been on here. Markets are anticipating lower production in both corn and soybeans with little overall change in ending stocks as lower demand is expected to offset the reduced production. History would support lower corn and soybean production after the USDA raised yields for both crops in August, only to turn around and lower them in September, that being the last update since the government shutdown or before the government shutdown. On the demand side of the equation, I think guys will be most fixated on the USDA soybean export forecast. Clearly, that last estimate of 1.685 was too high, but with the announced trade deal with China providing some hope, it also clouded the picture, however, as to date, there's only been scant evidence of Chinese interest in U.S. soybeans, likely nowhere near the 12 million metric tons the Trump administration has claims they have agreed to buy. U.S. FOB offers at the Gulf are slightly above Brazilian offers through the end of the year and only widen after that as we get into the Brazil's new crop harvest. A lack of sales to China has not stopped speculative traders from going on a massive buying spree, however. We had funds buying another 8,000 contracts of beans yesterday, taking their long position back up over 100,000 contracts. And if verified by the CFTC, would be their largest long position in 2.5 years. Still no schedule from the USDA and plans to get caught up on the delayed commitment of traders data. Open interest in beans actually surged 17,000 contracts yesterday, also an indication of fresh money coming into the long side of the market. Funds also bought about 13,000 contracts of corn, cutting that short position to about 50,000 contracts, just under that. Open interest surged 35,000 contracts in corn yesterday. Ethanol production, that fell to 316 million gallons last week, down from the all-time high the previous week at 330 million. NOPA crush on Monday expected to come in a record high, average guess at 210 million bushels versus 198 in September, and the previous record high at just under 207 million bushels back in December of last year. D's corn did match yesterday's 5-month high, 442 3/4. Next resistance, 450.5, that being the high from June. To get above this price level, I think you're going to need to see U.S. ending stocks under 2 billion bushels. Fresh 17-month high here on Jan beans as it worked its way above 1150. Even after today's USA report, still going to be a lot of uncertainty with Chinese buying and the disadvantage U.S. beans have in the global marketplace. It will be early next year before we do get caught up on the USDA export sales data. Perhaps market is setting us up for sharply lower U.S. production. That would explain why U.S. beans so quickly got above Brazil's after the announced trade deal with China. Also look for a sizable shift in bean oil usage away from biofuel production and into other domestic usage or exports. And in wheat, the Buenos Aires Grain Exchange, they followed the lead from the Rosario Grain Exchange, raising their Argentine production forecast yesterday to 24 million metric tons, well above the USDA's 19.5 million metric ton estimate from September. We'll be back later with updates on the USDA data. Thanks for listening, everyone, and have a great Friday.